What's up, guys? It's Brendan from Market Makers. A very special video for you tonight. We're going to look at market symmetry. We're going to talk about the pain trade, the short squeeze that's currently undergoing in all the marketplaces. When will it end? We have the resistance. We know the supports. We know that the next wave down is approaching. So guys, we need to talk about these key things in the marketplace. Understanding the global macro market that you are trading in will make you a more profitable trader. We are trading in a global recession, the beginning of a global recession. The U.S. officially in a recession, despite the rumors you may hear otherwise, going back all the way to World War II. 10 times now when we've had two negative quarters of GDP, it has always been a recession. They can control the language in social media, but they can't control your thoughts and knowledge. Understand that this is the beginning of a recession and it will get worse before it gets better. This will affect your trading, so you need to understand the truth about the environment you are trading in. Meta, which owns Facebook and Instagram, is red flagging you if you suggest that the word recession and its meaning is being redefined. Wikipedia has edited out the section about 2 negative quarters of GDP and locked the page to protect it from vandals. So they can change the definitions all they want. We know where we're trading. And when you're in a recession, the economy is contracting. We are trading in a bizarro world right now, my friends, where the markets rally on bad news. They rally on bad news because they then translate that to be, well, the Fed will be more dovish. I have some bad news for the bulls. The Fed will continue to raise rates. They have their speakers out there today, Bullard as well, saying he expects more rate raising, more tightening. They're going to keep the noose really tight. They do not want to be the 1970s Fed, which dealt with inflation for a decade. They're trying to get their hands around this. And when they do that, and tighten into a recession, you are going to have a collapse in the economy. The markets already, the economic factors are already showing us the economy is weakening. The Fed rate hikes take 6 months up to a year to actually work their way in. So you will see this reflected sooner than later in the equity prices. These low volume divergent rallies, let them top, let them come. You will make money on the decline. So let's talk about the sequencing that we can see. The sequencing here of Bitcoin, guys, primary downtrend, trading in a bear market. 4 down moves, 4 up moves. You can see the numbers here. This is part of the next wave up here. It looks like this is petering out, the last wave up, I should say. 34%, getting a little long in the tooth. Your longest move up so far has been 46%. So you're starting to get to that topping range. Your average move down has been 42% down. Your average move up has been 33% up. Again, 4 moves down, 4 moves up, the same exact in the equities markets, part of the market symmetry story. Guys, if we jump over to Bitcoin here on the daily, we went over the resistance and support levels. You understand that above you have your 150, you have your 1 fib at 27,389, the 1618 at 31,517, and if you got some type of crazy bullish, big, massive move up, 33,492 would be my market top. But to me, the price action looks really weak. The price action looks weak, even though you have a strong bullish trend. You have a low, you have a high, you have a higher low, you have a higher high, all through trend, guys. This is bullish, but you just don't have that breakout momentum that you're so used to seeing in Bitcoin. Not as much money in the asset, and the other markets look as if they're beginning to top. Now, unfortunately, for a lot of the media, we do have statistics on what the markets tend to do in recessions. And if you look at the S&P tends to decline an average of 33%. Not a coincidence, a Dow retracement. That's the average. That's including the light recessions and the heavy recessions. You guys know we are trading in a 3 sigma bubble in housing, bubble in equities, bubble in crypto, and a bubble in bonds. So we have a massive bubble, the first multi-pronged bubble in US history, but let's just use the statistics as they are. We don't need to dramatize them any, because I want to show you guys something. So here on the S&P, we're starting to move up some more. We're hitting resistance at 4163, the 233 just above us, the 150 above that, right at the 1618, 42,226. You have a little bit more room to run. Now, we know the S&P typically declines 33% in a recession once it gets going. So let's go ahead and measure this out. The S&P did drop down 24% from its peak. So we know that, so let's go ahead and take another 20% move down, because you're down about 13% from your peak. So 20% down from here, again, this is a best case scenario. 20% down from here will get you about 3294, so roughly 3,300 on the S&P. Your 45 angle slightly lower, around the 3,100 range. Now, we know the Nasdaq declined 34%. This is where I'm going to tie it to crypto. So the Nasdaq declined 34%, the S&P 24%. So therefore, 10% additional premium, right? So if this goes down another 20%, we could assume the Nasdaq would go down, just statistically speaking, probabilities, at least 30%, which again, I do believe it will go lower. But it could go down at least 30% from where it's at now, roughly 30.53. And if you look at the Nasdaq, if you guys remember from watching my video series, I've been saying this all along, you're going to come and retest your pandemic low area. This is why I do think this will definitely come down more, okay? 30% move down gets you back down to this recovery or part of the initial drop from the pandemic. Remember, I have said this many times, this is the Fed pump. This is 41% of the money supply being printed. This is a massive rise up, over 120% gain in 2 years. The Nasdaq. Now, the S&P typically returns 10% to 11% a year. The S&P went up over 120% over 2 years as well. This is the Fed pump, parabolic pump. This will all come back down to this range in all the markets, including in Bitcoin. I've been steadfast on this prediction. It doesn't matter to me if it does or doesn't. We want to trade the rallies and sell the dumps, okay? So we're going to play this both ways regardless, but we do know the Nasdaq, if it does move down 30%, since January has been tracking to Bitcoin at about a 2 beta. Bitcoin's been tracking to the Nasdaq about a 2 beta, which means Bitcoin would roughly be coming down about 60%, okay? So let's go ahead and look at Bitcoin. What would that do for Bitcoin? Let's just go to the weekly. If we look at the weekly here and we go down 60% from where Bitcoin is now, 60% would get you right about 8,928. So sub 10K Bitcoin, which is what I have been saying since November. Okay, that's just if those metrics track that way. And again, I do believe you're coming back down over here on the left in this range, my personal target around 3,800. Now, looking at this weekly pattern, guys, we've talked about my Gann pattern as well, but let's go ahead and throw this trend-based fib on here and get our, whoop, that's the fib time. Let's go ahead and get the trend-based fib. And we'll go from wave 1, wave 2, and wave 3. Now, Phi has you at 10,591, the 1618, the golden ratio. And again, this is a Gann market pattern, a law of 3 pattern, wave 1, wave 2, wave 3. This is not Elliott wave, followed by an A correction, a B, and a C wave, okay? This is your ABC correction at the end. Again, Gann believed, just like Dow, there's natural law in the marketplace. Gann believed the market moved in threes. You see it in 3 candlestick reversals, head and shoulders patterns, ABC corrections, 3 rising valleys, 3 falling peaks, lots of movements in threes. 3 primary impulse waves, ABC correction. This does appear in multiple marketplaces. And of course, Bitcoin did this exact same pattern the previous bull run. Okay, so this is what we're looking at here. Now, if you do notice, for those of you that have been watching this channel, we had this B wave projection up higher. Of note, though, we did hit this exact date, July 25th. So as of right now, in trend on this 40% up move, this is the high candle in the 40% up move, which is right on that July 25th date. Now, how did we get that date? I'll show you guys very quickly how we got that date. So we used fib time. Now, what we're going to do with fib time is grab the trend-based fib all the way down here, start the beginning of the bull run, up to wave 1, down to wave 2. That was the 1 fib. See, it hit it exactly where it should on our target. Currently the high, if this next candle does go higher, we'll move the B wave up. Remember, this is a projection pattern, a forecasting pattern. I'm not trading on the weekly time frame. I do most of my trading on the daily, the 8-hour, and the 4-hour. But this is a forecasting pattern for market movements. Now the end date here, I did update this based on moving this wave projection up. If we start at this B wave base up to that C, down to the A, this gives you the 1618 in September 26, okay? So September and March, again, 45 angles in the Gann calendar, multiple market bottoms, market crashes happen in September and March. Just to go over the last few, you had the market bottom in March of 09 after the great financial crisis. You had the dot-com crash start in March. You had Black Friday in the 1980s. The market crash happened in September. So markets move in patterns, market symmetry. We'll see if this September 26th date hits. I mean, that would be amazing. And then, guys, after a bottom is when you would start to move back up. So I do believe we'll go below sub 10K, but again, you will have movement back to the upside. If this doesn't happen in September, looking at November for the 2618, again, this is fib time. And then the 4236 would be in March. So that also makes sense as well. So we'll see how that plays out. Now, if we jump over to Bitcoin here, let's go ahead and current time frame. Let's go to the 4-hour time frame. 4-hour time frame, guys, you can see Bitcoin. If we take this downward projection from our wave, we discussed this last video. You do have this giant double top that has formed here. You have to watch your momentum. You're ping-ponging here between 0.5 at 22,879 and the 382 at 23,301. If you do come down to that 1 fib at 21,093, you got to watch that neckline, because that way you could start coming down lower. 19,615, 18,886, and of course you have 17,5 down here as well. On that daily time frame, we got to check our volatility. So we did that 2 days ago. So let's go ahead and check that again. Let's check with the Caterpillar. Let's see what we're doing here at the volatility. And you can see we are still tightening up. We have not expanded. We are still tightening. And again, this is extremely tight. The longer this tightens up, the more explosive potentially this move could be. And I do believe if the markets do start rolling over, this move will go down. And we could go down in a wave fashion like we talked about last video, where you come up before you dump. Got to clear all those shorts, max out that pain trade, and then dump. Now, if it does go up because the markets continue to rally, got to watch that 33.5, okay? That's what I'm going to be looking at for that market top for a failure, is right in that range. Now, if we look at, what else do we want to look at here? Let's look at, let me go ahead and turn this off, and let's see what we're doing in our Donchian here on the daily time frame. We'll go ahead and wrap this video up. The Donchian, like I said, this isn't a strong move yet. You're basically in the bottom third of your Donchian. You have the ability here to go up to 1618 at 31,517. You can see it lines up beautifully here, but you're just kind of petering around down here with your below average volume. We'll see how these markets end up, guys. If you guys are watching this video tomorrow morning with a cup of coffee, I hope you have a great day. Another video coming tomorrow. I'll talk to you guys soon. Take care, everybody.